year end. So the balance at acquisition will be used for goodwill. Goodwill in the statement of financial position. What about movement? Perfect. We are preparing statement of financial position. So retained earnings, statement of financial position. Perfect. And yesterday it was used for P&L. Okay, don't forget, it's extra depreciation made by subsidiary, so it must be split between parent and non-controlling interest. And what about the year-end balance? So we will need it for impairment. And also for closing balance in the statement of financial position. So completing these workings, there are many marks available. So now we will go line by line. So the first one, property having a carrying value of 140, this is a book value, depreciable component of 80. So now we have a problem because this is land and building and it must be split to two separate components because only building is depreciated. Had estimated market value of 160 million, depreciable element 92 million. And there is a 16 years remaining useful life of building. Okay, so now it must be split to land and building. And we will treat it separately. Land and building. So for building, it was 92 less 80 million. The difference between fair value and book value. Okay, so this is a fair value. The book value has been already consolidated, so now I need to adjust for remaining balance. So this is 12,000 asset above. And for land, it's the remaining balance. So this is 160 less 92, this is 68,000. 68,000. And the opening balance is 140 less 80, and this is 60,000. This is 8,000 above. 8,000 above. Now, for land, because it's not depreciated and there was no disposal, there is no movement. Okay, land is not depreciated, no movement. But building must be depreciated over 16 years' time. So 12 divided by 16 is 12,000. Divided by 16 is 750. So the year-end balance is 11,250, and it's extra depreciation, so expense. The next item, plant and equipment. The book value 111 million, and estimated market value is 120 million. 3 years remaining useful life. There was no disposal. Okay, so exactly the same principle. So plant and equipment, 120 million less 111 million is 9,000. 9,000 divided by 3, it's 3,000. 3 years remaining useful life. So the year-end balance is 6,000. The next item, intangible asset. So, estimated market value 8, not being recognized. So book value 0, okay? And 4 years remaining useful life. So intangible asset, 8,000 fair value, 0 book value. So this is 8,000. And it has 4 years remaining useful life. So the yearly depreciation charge is 2,000 and 6,000. Now guys, yesterday and today, the acquisition took place only a year ago. Okay? So we have accounted only for 1 year's depreciation. If the acquisition took place 2 years ago, we will need to present 2 years depreciation, the cumulative figure for retained earnings, but for P&L only current year figure. Okay, so be aware of that. Yesterday it was only a year ago. Today it was only a year ago. But I don't know what will happen in June 2014. And if your question says the acquisition took place 2 years ago, it will be necessary to calculate 2 years depreciation for purposes of retained earnings, for P&L just 1 year's depreciation. And of course, don't forget we must measure deferred tax. Okay, the deferred tax of 20%. Okay. So, 8 plus 12 plus 9 plus 8 is 37,000. The movement is 5,750 and closing balance is 8 plus 11.25 plus 6 plus 6, and this is 31,250. Okay, so this is the difference between book value and fair value at the date of acquisition, at the year end, and this is the movement. And now the examiner has stated we need to measure also deferred tax. So is it going to be deferred tax asset or liability? Liability, exactly, because the accounting value is higher than a tax written down value. Perfect. At 20%. So 37 multiplied by 0.2 is deferred tax liability of 7,400. 31,220 multiplied by 0.2 is 6,250. Okay, and there is decrease. So now you have two ways how to measure it. It's either difference between two numbers, or it's 20% multiplied by movement. The number must be the same. If it isn't, there is some mistake. So 5,750 multiplied by 0.2 is 1,150. So guys, we will start with easy bit. we will transfer 8,000, 11,220 and 6,000 to property, plant and equipment, 6,000 to intangible assets closing balance, and 31,250 to deferred tax. For each number, there was at least half a mark available, just for transfer number or for each correct number calculated. Okay, so we will take all those numbers and transfer them to correct position at the year-end closing balance statement of financial position. So I go to PPE 8,000, 11,250 and 6,000. So I will take it as a whole number because there is not so much space available. Plus 11,250 plus 6,000, and this is 25,250. So I go to PPE and I add 25,250 and make the reference to working 5. Oops, sorry. Now, 6,000 will be presented under the heading intangible assets and 6,250 under the heading deferred tax liability, the year-end balance. So reference to working 5 and the amount of 6,000 for intangible assets. Okay, so now I have completed that line. And I will move on to deferred tax liabilities. And I will add 6,250 and make a reference to working 5. Okay, deferred tax liability. So each number you have transferred half a mark. So just for those 4 numbers, we got 2 marks. Okay, so this was the year-end balance. Now, I'm going to work with movement and opening balance. So the movement, the net amount will be transferred to retained earnings. Okay, the netto amount. So 5,750 less 1,150 is 4,600. So 4,600. And I will transfer it to working 2 to retained earnings. And I will make reference to fair value adjustment working 5. And now guys, am I going to adjust gammas, betas or alphas? It should be associate here. Associate. Okay, so this was alpha, beta, and gamma. So, which companies' profits are overstated because it's missing depreciation? Subsidiaries, perfect. Okay, so this is 4,600 minus because it's extra depreciation. Well done. Okay, so far so good. So now we have completed that number. And now it's time for goodwill. Okay, so now I have the last number for goodwill. Again, I will take just netto amount, and this is 29,600. So I will take 29,600 and I will transfer it to working number 4, goodwill. So 29,400.